The Middle East is heating up again. Tensions between Iran and Israel are rising, and while the headlines focus on war, there's a deeper story: the impact on global business. Let's talk about who wins, who loses, and what China is silently planning in the background. Oil and energy impact. Whenever there's a conflict in the Middle East, oil prices react instantly. Iran is one of the top oil producers. Any threat to its supply makes global oil prices shoot up. That's good news for countries that sell oil like Saudi Arabia, Russia, and even American oil companies. But countries that buy a lot of oil, like India or Pakistan, or European nations, feel the pressure. High fuel costs can lead to inflation, and that hits both business and daily life hard. Defense industry gains. War and tension always increase military spending. Countries start upgrading their weapons and security systems. This benefits companies like Lockheed Martin, Raytheon, and Israeli defense companies. Their stocks usually go up when war seems likely. But when defense spending goes up, governments often cut budgets in other areas like health and education. China's role and strategy. China is watching everything closely. It has strong oil ties with Iran and growing tech trade with Israel. On one hand, it can take advantage of this situation by showing itself as a peace negotiator. It could also continue to buy oil at lower prices from Iran through long-term deals. But there's also risk. China's Belt and Road projects run through the Middle East and Central Asia. Any war in the region could delay or damage those plans. And if the conflict grows, China might face pressure to take sides, which it usually avoids. Middle East business effects. Local businesses in the region suffer first. Airlines get fewer passengers. Hotels and tourism drop. Trade routes become uncertain. Dubai, a global business hub, often feels the shock quickly. On the other hand, countries like Turkey or Qatar may benefit as safer places for trade and investment. Impact on the US and global economy. In the US, some businesses gain, like oil and defense companies. But the stock market usually becomes unstable. Investors get nervous. Inflation worries go up. Many people start putting their money into gold or US government bonds, which are considered safer during crises. Big brands with business in the Middle East may also face supply chain issues and reputation problems if they get caught in the politics. Conclusion. So while wars can bring fast profits to some, they also create long-term risk for many. The Iran-Israel tension is more than just a local conflict. It's affecting oil, global finance, and even shaping how superpowers like China move in the world. If this breakdown helped you, you can support our channel. Contact details are in the description.